This week's episode is brought to you by Crown Haven Wealth Advisors. Your retirement reimagined. Coming up today on RetireSHIELD TV.
You've got banks, you've got insurers, and you've got the stock market. And the problem with our industry is you've got a whole bunch of people, yelling at each other about what the best place is to put your money. We just properly locate assets amongst these three buckets: banks, insurers, and then the market once we have the risk capacity. And the result of that is our average client, their average annual returns are in excess of 8%. Each individual person thinks about it a little bit differently, and that also determines how we build the plan. I'm able to show them in real time how adjusting those recipes adjusts the outcome and how it changes what could possibly happen for them.
Knowing people and building trust. Get on the right path to achieve your retirement goals with Casey Marx and the team at Crown Haven Wealth Advisors. Understand the process and challenges of retirement planning. Discover the keys to a successful retirement.
Hello and welcome to RetireSHIELD TV. I'm consumer advocate Morgan Patrick, and as always, I am joined by the founder and CEO of Crown Haven Wealth Advisors and creator of the RetireSHIELD process, Casey Marx. Casey is not only the author of Baby Boomer Retirement Bootcamp, he is also a retirement income certified professional as well as a certified financial fiduciary. It is good to see you, Casey.
Good to see you too, Morgan.
So today, Casey and I are going to get into a few things discussing Crown Haven's cohesive investment strategy. So Casey, what is a cohesive investment strategy and why is it so important to retirement?
Well, it's very important to retirement, number one, because there are different locations that you must have your money in for different purposes of your money. And this is back to the retirement planning academia. So we call it our cohesive investment strategy at Crown Haven. But really all it is ensuring that we have certain parts of our portfolio in certain places that do certain things. So I'm going to kind of try to demystify the world of finance for folks in about 3 minutes here. So outside of real estate, which is an illiquid investment that we have to sell in order to gain the utility of our money back or rent it out. Both of those are completely dependent upon macroeconomic factors, what's going on in the world economy, or at least the US economy. And outside of physical commodities like gold, which we would also have to do the same thing, we'd have to sell it to be able to use it, or crypto, where a lot of people, their money's going to have gone poof.
Right.
There's three places where you can put your money. You've got banks, you've got insurers, and you've got the stock market. And the problem with our industry is you've got a whole bunch of people, yelling at each other about what the best place is to put your money. When in reality, there are pros and cons to each of these locations. So let's talk about the pros and cons.
Let's do it.
So a bank, the pro at a very basic level, is that your money is safe if it's FDIC insured. It's liquid. You can access your money when you need to access it.
It's there.
It's there. There's no cost to keep it there. You're not being charged a fee to hold your money at the bank.
Right.
What's the con? The 105-year average of inflation is 3.1%. So for folks playing the home game, inflation is a regressive tax that we don't see happening, but it reduces our buying power over a period of time. So for every $100,000 that sits in the bank, on average, you're losing about $3,100 of future buying power every year. So if I asked 100 of my clients why you wouldn't want to have all your money in the bank, they'd say, well, inflation is going to outpace my earning potential. If I asked 100 of my clients why you'd want to have some of your money in the bank, they'd say it provides me safety against losses, it provides me the liquidity I need, there's no cost to keep it there, right? So then you've got insurers. What do insurers do? They insure you against losses. They insure you against all sorts of different types of losses. You have car insurance, you have life insurance, you have homeowners insurance, you have flood insurance. So there are all types of different types of insurers, right? The types of insurers that offer retirement accounts are life insurers. And their business model is based on actuarial science. In other words, they don't know when you're going to pass away, but they know when 30,000 people your age are going to pass away, which allows them to use the law of large numbers for their advantage, quite frankly. They're also state mandated to maintain what's called a 1-to-1 solvency ratio,
okay,
which means they have to have $1 in capital for every dollar of liabilities. Why? Because they have to pay out death claims. If they didn't do that, they wouldn't have a business model. So what does this result in? They're extremely safe places to put our money. Okay, so what are the benefits of bucket number 2? Well, number 1, your money is completely guaranteed to be safe. Number 2, they offer accounts that on average can return anywhere between, at a very low end, 4%, the higher end, 8, 9, 10% if you're doing well. Okay? You can then turn around and use that interest as income. Because it's an insured account, there's no risk associated with it, so there's no fee being charged for risk management. Okay? And then because it's an insured account, under Indiana state law, it's considered probate protected.
Okay.
So if you pass away, it's not going to go through probate court. So if I asked 100 of my clients why you'd want to have some of your money in this bucket, they'd say, well, it provides the foundational source of secure income for me in my retirement. It's completely guaranteed against losses. I can get a great return. It works as a great bond replacement. By default, any money I put here, I'm saving on fees, and it's probate protected. What's the con? The con is it's like a time commitment the same way a CD at a bank would be a time commitment, and that's why the company has a business model, right? They're earning interest on your deposit when it sits there, okay? So do you put all your money in this bucket? Absolutely not. Be a terrible idea, just like you wouldn't put all of your money in bucket number 1. Bucket number 3 is the market. So what's the pros of the marketplace? Well, unlike bucket number 2, where you're consistently hitting, singles, doubles, sometimes triples, bucket number 3, you can hit home runs. You can hit a 40% return if you get lucky.
We like home runs.
We love home runs. The downside is that you can also strike out. You can have a really bad year in bucket number 3. So you can hit home runs and you can also lose quite a bit. Another downside is that there's risk, or there's fees associated with that risk management. And if it's not a fee you're paying an advisor, it could be transaction costs. It could be the time and energy you're using to manage it yourself, right? Another pro is that it's liquid, so it can play really nicely with bucket 1. So all we do with our cohesive investment strategy at Crown Haven is we look at the different purposes of your money, and we say, okay, we know we're going to need enough money for emergencies. We know we're going to need enough money for income. So let's handle those 2 things first, because in an order of operations, if we were triaging these issues for retirement, we're in the distribution stage. And our risk capacity, our ability to take risk, is much lower now.
Right.
Because now we have to create income from our investments, regardless of what our tolerance for risk might be. So our capacity is much lower. So in an order of operations, we need to make sure we have enough money for emergencies and enough money for income. Then, if we have the capacity to take that risk, we'll go to bucket number 3. But as a result of doing this, what we've done for our clients, and this is time after time after time, we've reduced cost on their investment by anywhere between 50 to 80%. We've reduced the risk of loss on their investment by about the same figure. We've increased their income by 50% or greater. We've made sure that inflation's not going to outpace their earning potential and their buying power.
Okay.
We've created a fantastic legacy plan for them, et cetera, et cetera. So a lot of benefits.
Tell you, it's diversification.
Yeah, it's true diversification.
You are taking a look at what the risk is, and I think there are a lot of people out there that don't understand what their portfolio is going through, and maybe there's more at risk. So having that conversation and talking about these 3 buckets and making sure you're covered.
Yeah, and the human aspect to this is, there's a lot of stress associated with losses, and I promise you that when you lose money in the market, you're not like playing the smallest violin for the dollars and decimal points that just disappeared from your account balance. You're thinking about all the time and energy that it took in order to create that. So it's extremely important to have this well balanced, and when it comes to retirement income, you really only get a couple of shots at this. You can take maybe 1 loss, but if you compound those losses on top of each other, you're going to run out of money pretty quickly.
Well, now's an opportunity. We're about to take a quick break, but if you want your very own personalized RetireSHIELD plan or a free copy of Casey's book, Baby Boomer Retirement Boot Camp, make sure to call the number that's on your screen right now, and you'll talk with one of our representatives. You can also visit our website, RetireSHIELD.tv.
Memories with Grandpa.
My first job.
My fourth job.
Crazy road trips.
Our first date.
Meeting our son.
Exploring our world.
Our world. Family and friends.
Our special song.
Secure your retirement by meeting with your local, independent, and fiduciary advisor at Crown Haven. Take advantage of your complimentary relationship visit by calling Casey Marx and the team at Crown Haven today.
Hello and welcome back to RetireSHIELD TV. I'm consumer advocate Morgan Patrick, and as always, I am joined by the founder and CEO of Crown Haven Wealth Advisors and creator of the RetireSHIELD process, Casey Marx. Casey is a retirement income certified professional as well as a certified financial fiduciary. Today, we've been discussing the importance of cohesive investment strategy and the life-changing ability of properly executed plan that can have, it can have on your life and your retirement. So Casey, I would love to hear more about this.
Well, so what I'd like to share with our audience is the typical plan that we see prior to coming in and working with us at Crown Haven. And this is as a result of literally a decade or more of analyzing all the portfolios from all of the big box firms out there.
So this is kind of what's out there.
This is what's out there.
Gotcha.
And this is what people are trying to use to create income for themselves, leave a legacy, etc. All the important things that they care about. So I want you to imagine for a second, the viewers at home, imagine that you're running a business, and imagine you're the CEO of that business. And it's called Your Wealth, Inc. And whatever your portfolio value is, I want you to kind of imagine this in your mind. I'm going to use a round number because that's easier. So let's say it's $1 million business. You've got $1 million business. The typical portfolio that we do a diagnostic on, and this is indicative of all the big box firms, everybody out there. The average annualized return, which is the important return, that's called the geometric average, it's with volatility considered, is 4.83%. The typical cost to maintain that portfolio is 1.53%. The typical max drawdown or maximum loss that could occur on any given Sunday is $389,000. So now, let's assume that it's Your Wealth, Inc., right? $1 million portfolio, $1 million business. On an annualized basis, you can earn what amounts to be $48,000 as a potential return on your investment. You have a consultant, let's call him your CFO.
Right.
Your CFO, you are paying on average about $15,000 a year to get you that $48,000 return. And at any moment, you could wake up and lose that 38.9%, that $389,000. So at a very basic level, and I work with a lot of business owners out there too, at a very basic level, if I were to ask you, if you're running this business, how long do you keep that going?
Not very long at all.
Not very long at all. So what we do at our firm, and this is kind of what we talked about in the first segment, is we just properly locate assets amongst these three buckets: banks, insurers, and then the market once we have the risk capacity. And the result of that is our average client, their averaged annual returns are in excess of 8%. Their costs are below 0.5%. So we've just cut their fees by 75 or 66%.
Wow.
Right? We've cut their downside by on average over 75%. Right? So not only have we increased their return and cut their fees, we've cut their downside. So all of those things kind of go together if we think about this logically. If we've reduced our downside, our ability to grow gets better.
Yes.
If we've reduced our cost, our ability to grow gets better. Guess what else this connects back to? Income.
Yes.
How much more of our own money can we use for ourselves at that point if we've reduced the downside risk, if we've reduced a significant portion of the costs, and if we've allowed our money to grow unimpeded by those things? This is how we create income plans for our clients that are sustainable over the course of their lifetimes out to age 95 with the 3.1% historical average of inflation built in, with taxes considered, with all of these things built in. And then, by the way, we get to work in minimizing those taxes. We get to work in making sure that their long-term health care is taken care of. We get to work making sure that those assets are protected if they pass away. All those things are handled, but just at a very basic level, by allocating and locating these assets in the right spot, it's life-changing. We literally will look at clients' portfolios, and by the way, I'm giving you the averages right now.
Right.
A lot of client portfolios, they'll come in, they'll think they're in a fantastic position, they've got a fantastic advisor, they're working with somebody they really like. We do a stress test on the portfolio. They've got $1 million portfolio. They could wake up tomorrow and lose 600 grand. And when they see that, they fall out of their chair, and I'm not kidding.
That's stress.
It's extreme, and their gut was telling them it. They were saying, okay, I need to probably reach out to somebody.
Right, a little nervous here.
A little nervous. We show them the actual data. We show them the factual data, the truth, that their advisor's not showing them. And then we show them how to fix it. And then we put it through the same systems to give them an apples to apples comparison of how our plan would be different. And then guess what happens to the retirement map, the secure income plan that I was talking about in a previous show. If you imagined your income as a line on a graph, with the previous portfolio, with the portfolio they've been using, it's like this. And there's a lot of variance around it, meaning you could run out of money sooner.
Right.
With our portfolio, it's going like this. Not only do you have the ability to take income, but you're going to have a legacy at age 95 that you can pass on to your heirs. So you can kind of have your cake and eat it too. It's amazing.
You look at the situation, and there's so many people out there that are confused. They're frustrated.
Yeah.
They're calling, they're coming in, they're setting appointments. It's about, you know, that communication that you have. It's about the education that you give, but you explain it in such a way that they have that aha moment.
Well, and I'm not here to sell anybody on an idea. I'm here to show you data. And data is incredibly powerful. Like, how I present this is, once I understand what you're trying to accomplish, and I understand whether or not your portfolio is currently in alignment or it's contradicting what your stated intentions are, then I show you the facts of the case. And it comes from third-party sources. It's not my opinion. I'm not going, oh, this is a terrible plan, you shouldn't have it anymore, or this portfolio is trash. I'm saying there's nothing inherently wrong with stocks. There's nothing inherently wrong with this blue chip dividend stock. There's nothing inherently wrong with this bond. But how these are put together in relation to what you're trying to accomplish isn't going to work, and here's the data.
It's got to be cohesive.
Yes, and then they look at it and they go, well, shoot. He's not lying to me, this is the data. And then we show them how we're going to fix it in the same system. And that's why 8 out of 10 people that sit down with me end up working with us.
Well, your opportunity is here. With that, we've got to take a quick break. But before we do, I just wanted to remind you that to join the thousands of Hoosiers that have already shielded their retirement with a personalized RetireShield plan, well, guess what? The lines are now open. So call the number that is on your screen to talk with one of our representatives, or you can also visit our website, RetireSHIELD.tv, for your very own personalized RetireShield plan or a free copy of Casey's book, Baby Boomer Retirement Boot Camp.
Do you know what that sound is? It's me traveling the world. Europe to Asia. I'm vacationing and living the retirement of my dreams because I just met with my advisor at Crown Haven. They helped me turn my nest egg into a golden egg. Take advantage of your complimentary relationship visit by calling Casey Marx and the team at Crown Haven today.
Hello and welcome back to RetireSHIELD TV. I'm consumer advocate Morgan Patrick, and as always, I am joined by the founder and CEO of Crown Haven Wealth Advisors and the creator of the RetireSHIELD process, Casey Marx. Casey is a retirement income certified professional as well as a certified financial fiduciary. Now, the importance of cohesive investment strategy, it has been a major topic of discussion today, emphasizing the profound impact it can have on your retirement.
Yeah, and that's why it's such an important component of our RetireSHIELD process as a whole. You know, when we go to build a RetireSHIELD for each client on a very customized level, obviously first we want to understand who that client is, what matters to them, what they enjoy doing, how they want to, envision their retirement for themselves. But, you start with the secure income plan, and then that cohesive investment strategy is really the underpinning of everything, because you're always going to need money for emergencies. You're always going to need money for income in retirement. And then you're always going to want to outpace inflation. So how we approach that is, like I kind of described, we sit down, we get to know you, then we diagnose the issues. And when we're diagnosing the issues, what we're looking for are whether or not your current portfolio aligns with or contradicts your stated intentions. So what are we looking for in that type of diagnostic appointment? We're looking for fees and expenses that erode your earning potential. We're looking for excess risk or volatility that erodes your ability to earn additional interest on an annualized basis or puts you at risk of not having the income that you need. We're looking at how inflation impacts your income. We're looking at taxation and tax strategies that we can use to maximize your after-tax return. There are quite a few things that we're analyzing for to ensure that this portfolio is set up properly for each individual client. And it really starts with the relationship, which is what we're trying to make sure is based on trust, shared values, a goal that we have in mind. And there can be multiple targets. Right?
Well, and you're having that relationship meeting, that first meeting, and you're kind of going through those steps, and then you get to the diagnostics, and you guys get into that second meeting, and I mean, you're going to find out exactly, you're going to get down to brass tacks.
Right.
And find out exactly, what's in your quiver. What arrows do you have?
Right, and that's very important to discuss. I mean, it all comes down to the fact that we're an independent firm. We have access to the entire toolbox. So, clients sometimes, they think of these big box firms and they say, well, okay, I'm going to this particular grocery store and they have access to, their branded cereal or their branded whatever. Well, when you work with an independent firm, we literally have access to every single grocery store, and we're going to walk through the individual aisles to pick out exactly the tools that solve the problems.
Based on what you have.
Exactly. And if you look at it almost as like a recipe, we're picking a little of this, picking a little of that, picking a little of this, creating a custom meal, a custom plan for each individual client to ensure that, like we have clients that come in that they want a snowbird in Florida.
Okay.
So it's going to be very important that they have liquidity available to them to put a down payment on a home. We have other clients that come in that there might be a large expense, like they want to purchase an RV because they want to travel out west. It's also equally important that they have liquidity for that. We have other clients that, they don't want to take risk no matter what. And that's very common. Okay, fantastic. So we're going to make sure bucket 1 and bucket 2 are completely full. They're going to have enough liquidity for life's emergencies and to do some of the fun things that they want to do. And then bucket number 2 is going to handle their income and growth. So it's completely customized for each individual person and what they're looking to achieve. The underpinning philosophy is safety first,
right?
And creating a sustainable, reliable plan that gives people confidence, because retirement planning, it must be comprehensive. Every decision we make has a ripple effect. And what's most important is that you're working with somebody that understands all of those ripple effects, how things work together, and can really craft a custom tailored solution for you, and then quarterback all of the different types of relationships that exist that are necessary to deliver on those promises.
I love the analogy of the grocery store, because it's not like you're going to go to the same aisle in the same area and get the same ingredients for every single person that comes to your office.
Not at all.
You're not going to put these ingredients together and then slide it into the oven for every single person the exact same way.
No.
So it's going to be custom, and that's what people need to realize, that your situation is going to be unique to you.
Yes.
And if you're retiring as a couple, unique to that couple, and your recipe is going to be different.
And that's another important thing to point out as well. When we're talking about, the recipe for what we're building, a lot of times what we are having to do is we're having to make sure that it's going to taste good for this spouse and it's going to taste good for this spouse too.
Good point.
And a lot of people have different thoughts about money, and that goes back to the sociological studies that have been done about money. If I were to ask, a husband how he feels about money, his first response might be, I know it's basic security, but then it provides me utility to be able to go and barter and trade for goods and services, and I view it as a means to an end. If I were to ask the wife, she might say it's security to me, and that's all it is to me. Conversely, I might ask the next gentleman that walks into my office, and he'll say it means freedom. Okay? So regardless of what I think about money, each individual person thinks about it a little bit differently, and that also determines how we build the plan and what ingredients we put in the recipe, right? But the underlying philosophy is that there is a certain amount of risk that is possible to be taken for each individual human, and it's our job to show them those numbers, those data points. So a good analogy would be like, imagine that you really, really enjoy spicy food.
Okay.
But you know that it upsets your stomach.
There's a line.
There's a line. So it's like you can do it, but how much is too much? Right? So we can craft the meal, but there is a line that we don't want to cross, right? So it's up to each individual person's taste, but then it's also our job to say, hey, based on arithmetic, based on the numbers, based on how this is all going to work over time, do you want a yes person or do you want an advisor? Do you want somebody that's going to tell you exactly what you need to hear based on our understanding of exactly what you want? Right? Because that's where the practical application, that's where the years of planning comes into play. I might look like a young guy to the folks out there, but I feel like I'm about 70 years old. I've put about 1,000 plans together, right? So I've talked to literally thousands of people and done this for them. So it's really, it all comes down to understanding exactly what people want and then being that person that says, here are the guardrails.
Right.
We can operate within these guardrails, and this will get you to the solution you're craving. And then what's fun about it is I'm able to show them in real time how adjusting those recipes adjusts the outcome and how it changes what could possibly happen for them.
How's your recipe doing? That's the question, right? Well, that's all the time we have for today. We're going to be back next week. We'll talk about more recipes, I'm sure. And if you are looking for that peace of mind that we talk about so often in your retirement, don't wait. Remember, our lines are open 24/7, so call the number that is on your screen right now. Call that number, or you can visit RetireSHIELD.tv for your free copy of Casey's book, Baby Boomer Retirement Boot Camp, or to have a personalized RetireSHIELD plan created for you by Casey and his fantastic staff of financial advisors.